Daily, well, let's start with the monthly chart. Monthly chart, since tomorrow is the last day of the month, and therefore today was the last trading day. Monthly chart, we last month sold off and formed a reversal bar, but it was a bear bar and a doji. And this month, we're forming a bull entry bar. Good bull bar, good reversal, but big down, big up. Makes me think that next month is probably going to be disappointing. So what's the chances that next month is a bull bar closing on its high? It probably will not be a bull bar closing on its high. And that makes me think that the odds are there's probably sellers above. We have a weak buy signal bar last month. We broke above it. And this month makes me think that the odds are we're probably next month. Let me say it differently. There's probably sellers above the high of this signal bar. And therefore we broke above it. Bears selling, scaling in, probably will avoid a loss. Just like the bulls who bought the low of this buy signal bar here, this doji, and they scaled in, they were able to avoid a loss as well. Weekly chart. We have a micro channel from the low of April 25th. Strong enough breakout, second leg up likely. However, we're getting high in the range, and therefore we may pull back. We have a breakout point, the high of May the 8th, increased risk that we'll probably test there. We have a weak buy signal bar above the high of last month, and we pulled back. And this week, we're closing around the midpoint of the month. I think the midpoint was 59.20, if I remember correctly. Let me just look at my other computer. Midpoint is, it's 59.10. So we're above the midpoint by about 6 points. And that's a sign of bullish behavior. How many traders are going to buy above the high of this bar? Probably not many. And that makes me think we may test the bottom of the bar sometime next week. But it's not a great sell signal bar. And therefore, probably buyers somewhere below. Daily chart. I've been saying that 6,000 is the obvious magnet. And I think that's true. I think the odds are the market wants to get up to 6,000. And I think we will get to 6,000. Today, it's not a great buy signal bar. It's a doji, and therefore that increases the probability that there's sellers above today's high. So really not ideal. Tight trading range. Breakout mode. Most of the bars above the moving average. Slightly higher probability that we get trend resumption. Give me just 1 second here. First bar of the day. Well, on the open, we had a tight trading range, triangle. We gapped down on the open. And first bar of the day, we formed a bear bar. However, we have a decent tail below the bar. And that tail increased the chances that whatever sell-off we got below 1 was probably going to be more of a bear leg in a trading range than the start of a strong bear trend. 2, follow through selling for the bears. Good for the bears, consecutive bear bars, but a tail on 1, tail on 2 makes me think that this is probably a bear leg in a trading range. 3, bull bar, but not a strong buy, probably sellers above. 4, outside down. Outside bar, after consecutive bear bars 1 and 2, probably going to get a further second leg down, but I suspect there's buyers not far below. Buyers at the 55.90 price level, buyers at yesterday's 31. and then we sold off on the next bar and we reversed up sharply. And that's a sign of profit taking. Reversal up, bar 5, strong enough reversal increases the odds that we're probably going to pull back. And therefore, always in bears, I think it's worth getting out. Chances of the market going a lot lower are not all that high. And then bar 6, bull bar, but not a strong entry bar for the bulls, tail below the bar. And then 7, more buying pressure, so more bears giving up, more bulls buying. Good bar 7, however, probably going to pull back for at least a few bars. We have a strong bull bar closing on its high, but it's climactic, and the channel down to the 5 low is rather tight, and so probably bad follow through on 7. As far as buying, or as far as selling, I would not. It's a 3-bar micro channel. And when I say bad follow through, we may just test the breakout point, the 6 high, but we could still, odds are we'll still probably go higher. 8, follow through for the bulls, consecutive bull bars, good for the bulls, but we have big down, big up, and therefore big confusion. And we have magnets. So we may go a little bit higher, but we still may have to test back to the 4 high and possibly the 5 high. 9, bull bar, but a tail above the bar, close around the midpoint of the bar, sign of weakness for the bulls. 10, inside bar, so you can call it a high one buy, but a micro channel. There might be sellers above, but even if there's sellers above, there's probably buyers below the bar, and therefore not a good sell. Traders only looking to buy here. And then the bear bar, we have a doji, but probably buyers below. Then bull bar, outside up, but we're starting to go sideways. And the bears who sold down to the 7 low, some of those bears will bet on the trading range and will look to scale in higher. And because of that, that makes me think that the odds are there's probably sellers somewhere above, and we still may get a deep pullback. This is mostly a trading range, and this reversal is not all that clear. 13, doji, but probably buyers below. 14, outside up bull bar, good for the bulls, probably going at least a little bit higher, but tight trading range. Again, my problem is we're probably going to pull back. Bear bar, 15, closing on its low, strong enough reversal, probably going to get a second leg down. 16, reversal bar, high one buy, but probably sellers above. 17, second leg down, good for the bears. We may go a little bit lower, micro channel, 14 high to the 17 low. However, and we have breakout points, the 4 high, 6 high, and the 5 high. All of those targets may get tested. And then you can see we broke to the upside above 17, but found sellers. 17, breakout pullback sell, but almost an outside bar, or 18. 18 is an outside bar, so it broke above 17 and pulled back on 18, so you can call it a low one short, probably buyers not far below. And you can see we got a doji on 19, but that's really not a great buy signal bar. And then 20, outside up, good for the bulls. But I suspect we're probably going to go more sideways here than straight up. 21, bear bar. Bears starting to get control over the moving average. We're starting to get mostly closes below the moving average, and that's a sign of increased selling pressure. 22, bear break out of the tight trading range, good for the bears. Possible second leg down. We sold off to 17, formed a tight trading range, 18, 19, and 20, and now we're breaking out to the downside. This looks so far like a trading range open, and therefore the magnet of the 6 high and 5 high are still likely, or they're reasonable. Bull bar 23, closing on its high but tight bear channel, probably sellers above. 24, doji, not a great buy above 24, not a great sell below 24. But the issue is the channel. And then 25, bear breakout, outside down, almost outside down. Good for the bears, probably going to go at least a little bit lower. That was weird. Well, TradeStation just, that has not happened in a very long time, but TradeStation just crashed on me, so I'm going to have to restart it. Give me just 1 second here. I'm going to turn off my screen. Almost ready here. All right, we lost all the lines, but that's okay. We can make do without them. So we had the outside bar 25, strong enough bar. We'll probably get a second leg down. Doji 26, probably sellers above. Second leg down 27. Good for the bears, but consecutive sell climaxes getting low in the overall range makes me think there's probably buyers not far below. Maybe buyers at the 6 high, buyers at the 5 high. And you can see we've got a bull bar 28, good for the bulls, but 3 consecutive bear bars. As strong as 28 is, and it's strong enough that we'll probably get a second leg up, it's still not all that great of context. The bulls, they need a strong entry bar or a strong follow-through bar. And then we got a doji on 29. 29, not a strong reversal, not a strong entry bar for 28. An implied second leg up, rally, pullback, second leg. And that's why 30, reverse down 30, breakout, pullback, sell. Probably buyers below 30. However, if the market hesitates on 31, we may go lower. And instead, we went straight down on 31. 31, strong enough breakout bar, good for the bulls, good for the bears. We may get a small second leg, so we may go a little bit lower. Tail below 31, buy, sell the close bears, sold the close 27, disappointed 28, 29, some getting out break even. And you can see that's what happened with the 31, with the 32 low. You had disappointed bears who sold the close of 27, scaling it higher, getting out break even. And then we had this strong reversal bar. However, we had a low 1 on 30, and some of those bears will sell below the low 1 and scale on higher, betting that the market is forming a trading range at worst case. Good bull bar, but let's see the follow through. And the follow through was disappointing, 33. 32, strong enough reversal. Disappointment 33, probably buyers below 33 and at least a small second leg up. But I suspect we're going to get back to the 30 low at a minimum. And instead of getting a small second leg up after 32, it was an implied second leg trap for the bulls. Rally, first leg, pullback, second leg up. And then we got the strong breakout, 34. 34, strong enough surprise, trapping bears out of a good trade. And bears, so some bears, they got out of shorts above this bar and didn't sell here. And so they got trapped out of a good trade. And trapping bulls into a bad trade, they bought the 33 low, they bought somewhere down here, and they got a surprise, 35. 35, enough of a surprise, we may go a little bit lower. And then 36 followed through, not ideal for the bears. We have a tail below 35, tail below 36. It's a micro channel, 33, 34, 35, and that's good for the bears. But the tails below the bars is a sign that we'll probably pull back, and we have support nearby at the 5 low. And then 30, 36, we had a really strong bar. That's a strong enough bar. We're probably going to go lower, but it's a big bar, and big bars with big risk generally pull back. And therefore, this makes me think the selling is unsustainable. 37, bear bar, but a tail below the bar. Probably not going a lot lower. And then 38, we have a bull bar. What about buying above 38? It's probably a low probability buy. You're buying after a micro channel with lots of selling pressure. Even though it's climactic, which it is, well, the bears who sold the close of 37 and sold more above 37 are probably going to make money. 38, bear bar, closing on its low. Closing near its low. Probably going to go a little bit lower and test down to the 37 close, but it's a low one short after a sell climax, and that lowers the probability for the bears. Weak follow through 40, but not a good buy signal bar above, so we'll probably go a little bit lower. And then 41, bear breakout, testing the low of 38. Probably buyers on the close of that bar or below it. And even if we get below the 37 low, probably buyers below. 42, bull reversal bar, good for the bulls. Probably going to go, I think, always in bears. Get out. Too much risk. We test up to the 38 high and the 5 low. That was a reasonable breakout point. Reasonable place for the bulls to buy, and they got trapped, so we'll probably get back up to it. Follow through, 43 consecutive bull bars. Good for the bulls. Probably going at least a little bit higher than 44. 3 consecutive bull bars. Probably buy the close, but we're so close to the breakout point and the moving average and an overall trading range day. You can call it a trending trading range day if you want. Trading range, bear breakout, trading range, that we may end up testing the breakout point 39 high and getting a deeper pullback than what the bulls want. Bear bar 45, but after a 3-bar micro channel, probably buyers below. And then we formed a bull bar 46. It's a high one buy, but a high one buy just below resistance, the moving average, and the 5 low. There's probably sellers above the bar initially. However, after the 3-bar micro channel, I suspect there's buyers below. Some bears who sold below 45, disappointed by the high one 46, concluding that 45 was not a great sell, and therefore they're trapped in the losing shorts. Some of those bears will buy back shorts back on a retest of the 45 low, and that's what happened on the next bar. And that's also in part why there were buyers below 46. 46 doji, but probably buyers not far below. Bull bar 48, second entry buy, good for the bulls, but still at the moving average. The one thing the bulls have going for them is the reversal up 44, 45, 46 after the large sell climax down to the 37 low and the magnets above. We have the red line, the 5 low. We also have the 28 low. That's another breakout point. And there's a cluster of stop entry buys in here. And if you look back, you know, wasn't all that reasonable. You look at this bull buy signal bar here and you look at that and you think, yeah, we're in a bull rally, consecutive sell climaxes, so it's a wedge. It's a bull flag in a trading range. You know, it's a reasonable buy signal bar closing on its high. So I'm going to buy it. And some of those bulls, they know it's a trading range. And what they'll do is they'll buy and they'll use a wide stop. And what do they do here? They look and they think, trading range, bear breakout. Maybe we're forming a lower trading range. So if I buy here and I buy more lower, what's the chances that I can get out break even on the trade? Obviously, they're disappointed by the trade. And you can see we're getting really close to that break even price right there. But the odds are we're probably going to go back to all of this price level. 49, weak entry bar for the bulls, but it's at least a bull bar, and therefore it's a bad sell, so probably buyers below. 50, bull bar, 3-bar micro channel, probably going to go at least a little bit higher. Next target, the 36 high, top of the sell climax right here. And the target after that, these buy signal bars in the top of this sell climax. Bear bar 51, you can argue 2 legs up after, so 46, pause, and then 50 or 51. But 42, 43, and 44 is strong enough that we may get a measured move, and we may need 3 legs, so we may go a little bit higher. Not a great sell signal bar 51 after 3 consecutive bull bars. 52, we have a bull bar closing on its high. Good for the bulls, but probably sellers above and sideways. And then you can see what happened. 53, we have a bull breakout. So the bears that sold 52 got trapped at 53. And some of those bulls will be disappointed that they'll try to get out break even at the 52 high. And they were allowed to at 54. 54, reversal down, good for the bears. But we have a wedge. So we have a wedge, 44, 50, and 53. But a wedge in a very tight bull rally where the bears are unable to make money selling with stop orders, that lowers the probability for the bears. Always in bulls, okay to get out below 54. But you're getting near the bottom third of the most recent leg, the 52 low to the 53 high. And there might be buyers around the 52 low. And instead, you can see what happened with 54. Instead of it triggering the sell below 54, traders aggressively bought it. And the front-running bears who sold the close of 54, hoping that 54 would trigger, immediately they got trapped. The open of 55 immediately went up. And if you go to a 1-minute chart, I made the comment that 54 reversed up rather quickly. It was this bar right here. So you can see on the 1-minute chart, we had this rally, and then we had this micro channel down that was a little bit parabolic here. So that was the micro channel right here. And we had this really strong reversal bar closing on its high. That's a surprise, and it's strong enough for a second leg. And that, in part, made me think we're probably going to go at least a little bit higher. And you can see that happened in the first minute. So it happened very quickly. 56 consecutive bull bars. Good for the bulls. Probably going to go at least a little bit higher. This makes me think that we are going to get up to the 28 high and the 33 high. We have measured move targets, the 42 close, which we're getting close to. There's a measured move target, breakout point right there. That's a target. We have a bull breakout of the bull channel. So it's basically a bull breakout of a wedge. Increased risk of a measured move target up there. Consecutive bull bars, 55, 56 makes me think we're probably going to go higher. 57, small bull bar, but probably buyers below. And then 58, outside up, good for the bulls. A little bit of a surprise. And whenever you get an outside bar, especially a climactic outside bar, late in a rally, I mentioned this is the pivot low, 54, and we're 4 bars from the pivot low. That increases the chance that you may have to pull back. So as far as buying the 58 close, it's probably going to go more sideways. And then you can see disappointed bulls. They bought the 58 close, disappointed 59. Some getting out break even on 60. 60, reversal bar, but a tight bull channel. Probably buyers somewhere below, so not a great reversal bar. And then a bear bar closing on its low, 61. Good for the bears, but the channel up so tight that traders will look at 61 as an opportunity to buy at a cheaper price. And that's what happened with 62. 62, bull bar closing on its high, but after consecutive bear bars, 60, 61, probably sellers above 62, so not a great buy. And then 63, bear bar. However, disappointed bears sold at close of 61, disappointed 62, some getting out 63. And then you can see 64, 64, reversal bar closing on its high. Good for the bulls. I suspect we're probably going to go at least a little bit higher. We may get up to the open of the day and the 16 and the 14 high, the high of the day. Follow through, good for the bulls, probably going to go higher. And then you can see doji, so no good area for the bears to sell. And then we broke out on 67. And at this point, we're only a few points away from the high of the day. Probably going to go higher, but we may pull back first. Problem is it's consecutive sell climaxes, and therefore I suspect the upside is probably limited. Doji on 68. And if you remember, that bar, 68, rallied above the high of the day, and then really quick, in like just a minute, just in a few seconds, sold off down to the low of the bar. And that was a warning that we may not go that much higher. But it's not a great sell. 68, bull bar, or excuse me, 60, 69, bull bar, high one buy, tail above, probably sellers above, but tight bull channel, we may go a little bit higher. And so the tricky thing is bears will sell it, but they're probably using a wider stop, betting that this is a late rally. So we could easily go above the high of the day and the high of this bar. Bull breakout, 70, good for the bulls, but we have that high one buy on the prior bar and a tail on the current bar, increased risk of sellers above. And you can see the bulls, the bears who sold 69 and scaled in higher 70 were disappointed, and they got out break even on the next bar. Some of those bears, they sold the 69 high, scaled in higher, and got out break even. 72, second leg up after 70, good for the bulls. But now we're getting a series of buy climax bars with a lot of overlap. And that makes me think that this is probably not going to go on much higher. And then we sold off on 73 and reversed up. You can call it a high one buy, but there's probably sellers above. And then we basically just went sideways into the close. This rally was too strong. This rally was too climactic. And therefore the odds favored a pullback. 60-minute chart. Strong enough rally on the 60-minute chart that I suspect there's probably buyers below, and therefore we'll probably get a second leg up. So here, there's probably buyers in this area, and we're probably going to go above that high. But obviously, end of the week, so we'll have to see what happens on Sunday night, the start of the Globex session. Stop entries. I thought it was okay to sell below 4, but low probability, big bar, big risk. And then I thought it was reasonable to buy above 6 if you understood the logic. 2 legs down, and chances are, if we near the low down here, chances are we may get an opening reversal. Bulls, they can buy, but they probably get out below 15. Bears, if they sell below 15, where do they get out? Tough call. They don't technically have to get out in here. Maybe I think they do get out above 23, but if they get out above 23, it's very tricky to get short again. And I think if I was trading with stop orders, I would miss this. The problem is it's not a great buy above, and because you're in a channel, it's common for channels to test 50%. So here's the bottom. This is a tight bear channel, and the market obviously tested above 50% in that case. And then if the bears are short, they get out above this bar right here. 28, but 28, big bar, big risk. Bulls that buy it. Some get out below 30, others stay long, and they probably get out below 33. If they don't, they get out during 34. Bears, they can sell during 34 or below it. And then the bears, some get out above this bar. I don't think they have to, but I think it's reasonable. And maybe you sell again below 39, but I think it's better just to wait. Bulls, they buy 42, and they don't have to get out below 45. If they do, they buy again 46 or 47. And then some get out below 52. The same thing, if they do, they probably buy again above 53. And then, probably get out below 54, but it never triggered. And then the bulls got the rally. They probably get out below 60, but if they do, they can buy above any bull bar, 62, 64, any of those are okay. And if the bulls, if they're long, where do they get out? They get out below any bar, maybe an average bar range below a bar. At buy 72, I'd get out just a few points below it at that point. This is so extreme. Odds are we're probably not going a lot higher. Limit orders, I thought sellers above 3 and buyers below 2, but you need a wide stop. And it's better to look to buy some kind of symmetry. So you see the bear breakout, follow through, deep pullback, look to buy some kind of symmetrical leg down. So buy down here. Don't buy the low of bar 3 or the low of bar 2. And then I thought probably sellers above 1, especially when the market started to stabilize with 12 and 13 and 14. I thought sellers above 16, sellers above 17, even sellers above 18. But I thought buyers below 18 during 21 and 22. I thought buyers below 24. And you can see some of those traders, they bought 24, disappointed with 25, tried to get out break even, and they couldn't. And then the market got a second leg, and then it allowed them out over here. And then I thought buyers below 30, scaling in, but tough trade. And then I thought sellers above the 30 high and even the 31 high, especially if they're using a wide stop and they're willing to scale in. And then I thought buyers below 39. I thought sellers above 37, the first bear bar closing below its midpoint. So its first bar price went above, closing above its midpoint in the micro channel. I thought buyers below 39, buyers below 40, buyers below 41. I thought buyers below 49, but sellers above 46. But that 46, traders selling above 46, it's minor, and therefore there's buyers not far below, and we bounced. And buyers below 58, I thought that was reasonable. I thought selling above 59 was okay, but it's such a tight channel, not really worth it. And then buyers, as far as buying below a bar, you don't really get an opportunity here. And then at this point, I think it's really dangerous to start trading with limit orders so late in the day. Buy the close, sell the close, probably buy the close on 8, but not ideal. And then nowhere in here is technically buy the close. And I thought, maybe sell the close 34 or 35 if you're quick, but that's still near the bottom of the trading range, not ideal. And then selling the close at 36, I think it's really dangerous. For me, I just don't think it's worth it. For that point, I'd rather wait and see what the follow through looked like and try to enter on a pullback. And then it's technically buy the close 44, but better to buy a pullback. So I had to wait for the reversal attempt and look to buy the pullback. And I thought 56 was an okay buy the close bar. Bull break out of the bull channel. We have magnets above, so probably okay buy the close. And that's pretty much it for buy the close. Everything else is more buy a pullback. Let me take a look at questions. Okay, would you consider bar 15 onwards to be an endless pullback? Kind of, yeah, you can look at it that way. So we had a rally. So basically it was 15 onwards, a in this pullback, I expected at least a second leg up from the 3-bar micro channel here for a measured move of the opening sell-off. Was there a context mistake that I missed out on? Yeah, so basically what they saw is this. They saw a reversal. She did something reasonable. You saw a rally reversing this sell-off. What you have to remember is this. Even though this doesn't look like a great rally or a great sell-off, it's a breakout on a higher time frame. So look at this right here. This is basically, let me just go to a day-only chart. You're buying a reversal attempt after a bear breakout and follow through. And it's really common for breakouts to get second legs. So even though we got this rally here and here, it's strong enough momentum to make me think we're going higher. But once you start to stabilize, the risk is real that the bears who sold anywhere in here, they sell the close of 2. They sell below 4, and they use a wide stop and scale in. Chances are they're at least going to avoid a loss. So they sell here. And I know it sounds crazy. They sell here. They sell more higher. And you can see they were allowed out break even. If they sold 1 contract here and they sold 2 contracts here, break even would be somewhere up there. It's not a great trade. It's not something I would do, but that's reality. Trading ranges are forgiving. And most of the time, and this is the whole logic behind why break even stops don't work in trading ranges. And that's because breakout points get tested and allow limit order traders to make money. And so when I see a trading range, I'm always thinking the limit order bears that sell here, as long as they're patient, they're probably not going to get screwed and they're probably going to make money. The bulls buying here, as long as they're patient and scale in, they're probably going to make money. So here we had a rally. That's true, but we have big down, big up. And what you don't know is if this is going to be a trading range or if this is going to lead to a second leg up, or is this a bear? Is this some kind of bear channel? It's not all that clear yet. And that's why I think it's better for most traders to exit below 15 and wait for a bull bar. And this is common. You get these bull reversals in a tight bear channel, and it makes you think that you're getting a wedge bottom, but instead, these are just pullbacks in the tight bear channel. And the channel keeps continuing. Here, we have a strong reversal bar 28, and that's a reasonable buy. But the problem is, look at 25, 26, 27, 3-bar micro channel increases the risk that even though we may get a small second leg, there's the increased risk of this. Another bear flag. And you can see that's why we ended up selling off there. So the channel was too tight. I've got time for one more question, and then I have to hop off. Okay, this is a good kind of weekend question to think about. What happens when trap traders are able to break even? Well, think about a breakout. So this is the last, for all the people in Discord, think about this question. What is the energy behind a breakout? We know it's momentum, but think about what that momentum is. And this is why it's important to understand what happens to limit order traders when they get trapped on a breakout. So what happens so think about it like this. Al calls it the pain trade. What happens when you sell above 2 and use a wide stop and you scale in? You sell here, sell more here, you sell more up here. What ends up happening? You have a very painful experience. And so when limit order traders fail to get out of a trade, their risk becomes higher and higher because they're selling and they're averaging in. So they're selling and scaling it higher, increasing their risk. And therefore, when you start scaling in, your risk gets bigger and bigger with every tick. And so you have to exit the trade quickly. However, when you have a trading range day like this and you get a sell climax, what happens is traders believe this is my problem with 36. My problem was too much buying pressure on the day. And my concern is if I'm selling 36, it's only a matter of time before the market goes sideways and possibly reverses up. And therefore, you have a lot of institutional traders willing to bet that gaps are going to close. And so they'll start building positions down here, especially when you start getting buy signal bars, betting on 2 things. One, Either the market's going to go sideways and they can get out break even, or the market's going to reverse up and close breakout points. So when breakout points close, there's no energy behind the breakout. And when breakout points stay open, there's a lot of energy behind the breakout. So here's the last example I'll give before we sign off here. Just got to find it. It was 2 days too soon. There it is. Okay, so we got a rally on the open. So here's the bar one low. And we have a tight trading range. And you can see all of a sudden we get the surprise breakout bar, trapping everybody to the left. And a lot of those bears, they look at that and they panic and they think, oh my gosh, that's a big bar. Let's see what the follow through looks like. Oh my gosh, an equally bigger follow through bar. So what do? If you're a bull and you bought any of these lows and you see this as your follow through, you're already taking a beating and you probably scaled in. Now you have an even worse loss. Well, everybody's trapped on the wrong side. You have bulls trapped into a losing trade and bears trapped out of a winning trade. Not just on a 5-minute chart. On a higher time frame, this is a breakout of a tight trading range. So you have a lot of traders trapped and a lot of institutions and computers and people selling. And that leads to this, where the market can go a lot lower. And so if you bought here and you stayed long, that was 1 times, 2 times, when more than 3 are. So anyways, point is when gaps stay open, traders get trapped. All right, we'll have to wait and see what happens on Monday. Thanks for everybody for listening, and I hope everyone has a great weekend.